And Congress is now fighting over the next economic stimulus plan. Joining us now to discuss China and the economic stimulus is Ed Mills. He is Washington analyst at Raymond James. Ed, good to see you. First, just want your thoughts on what's happening between the U.S. and China.
Alexis, great question. I'm starting to get a lot more questions here at Raymond James as to kind of how serious we should take this. I think this is an escalation, but I think it is far from something that I am really concerned about. I think this is exactly how we thought the year was going to play out, that the Trump administration is using China as a central theme in President Trump's reelection. And my expectation is that we're going to see a series of escalations every 1 to 2 weeks between now and November. I do think, generally speaking, though, they're going to avoid things that really completely disrupt the relationship. One thing that we see with the Trump administration time and time again is that they lead with the punchline, fill in details later, and oftentimes never fill in those details. So I think this is much more about tit for tat rather than a significant fundamental altering in the relationship.
Ed, can you unpack what you see what is that next series of escalations, and what's the market risk here?
Brian, so what we've been saying with this U.S.-China trade war is that this is something that started out as a traditional trade dispute. You saw the implementation of tariffs 2 years ago. Quickly, this moved into a tech war. And what we're seeing increasingly is the financial space is the new front in this war. So what we are kind of looking at from Congress is that the Senate has already passed a bill making it more difficult for Chinese companies to list on U.S. stock exchanges. There is a push to not allow U.S. federal government employees to invest in Chinese stocks. We could see additional efforts to restrict kind of U.S. pensions and 401ks in their investments in those stocks as well. We could see sanctions on Chinese officials. We can see China's access to the SWIFT banking system limited. So these are all things that are kind of escalations. But what I hear consistently from both U.S. and China contacts is that there is a desire to save phase one of the trade deal, to keep the economic lane, the only lane that's working, at least moving along until the election.
You ticked off a bunch of things there, Ed, that the U.S. can do to China. What kind of arsenal does China have in terms of retaliation against the U.S.?
That's a great question, Alexis. And I think when you look at it, one of the concerns that China has is what can they do to the United States that does not hurt them? One of the things that we have been looking for is a boycott of U.S. items within China, a step up of safety inspections, things that are kind of more detrimental to day-to-day operations of U.S. businesses within China. They've announced that we have to close our consulate in the southwestern portion of China that oversees the Tibetan region. I think there is a kind of underlying geopolitical message that's there. But when you get into kind of say a boycott of Apple, you look at how many jobs in China are tied to Foxconn. You look at other things where most of the U.S. businesses in China are joint ventures. So you're at least harming 50% of those joint ventures. So they have ability to kind of harm or kind of move this in the wrong direction. But disproportionately, the United States, I think, has the upper hand here.
Well, then, Ed, if you still see the trade deal staying intact, then a broader market sell-off off this news, you think it's just unlikely?
For the most part, I think what the market has been looking at for the last couple of years is that once we hit all-time highs, or kind of when the market are kind of big off its lows, that's when the Trump administration and President Trump does get a little bit more aggressive with China. And investors have been awarded time and time again for buying those dips. The question always is this time different? What I hear from investors is that there is an expectation from the Trump administration that they are going to go after the same playbook between now and November. And then I also hear that if Biden is elected president, we could see kind of a continuation of an elevated kind of tension between the United States and China, but it wouldn't be as aggressive and it wouldn't be as top of a priority. And you could see some relief with the election if Biden were to win. So generally speaking, I don't have a lot of clients who are positioning themselves for kind of a market sell-off or shorting names that are most exposed to China.
And I want to switch gears a moment because it's not just China that investors are worried about. They're wondering when this stimulus package is going to come to fruition. Now there's infighting among Senate Republicans. Mitch McConnell is saying we can expect some sort of a package next week. How likely is it that we get something before lawmakers go on that August 7th recess?
Yeah, I think it's very likely we get something before August 7th, but that is already a slippage beyond what the original target was. If you remember, the unemployment benefits of an additional $600 expire on July 31st, Alexis. So we have a lot of Americans who are receiving that extra funds that are going to get very nervous over these next week or two. Ultimately, I am always looking for a crisis or a deadline for Congress to act. I do think that August kind of deadline is enough. And when you saw the additional kind of 1.4 million Americans filing for unemployment with the numbers released yesterday, a surprise uptick, that does put pressure on Congress to get something done. So if we don't have a large package by that first week in August, I do think the fallback position is to extend out something on unemployment benefits, probably not at that $600 a week, but something beyond what the state benefits, which is traditionally about $300 a week, maybe kind of in the $300 to $400 range is kind of the hope of folks that I talk to here in DC.
Lots of questions still up in the air. Ed Mills of Raymond James, thanks so much.
Thank you.